Usually I say good morning, good evening, good afternoon, wherever you are, but Sue said it already. So I just want to say thank you for coming and hope you enjoyed today's presentation. We have a lot of market activity today. The United States just reported its unemployment number, so we should see some movement as we go live into our program. And before we do that, we'll start with the disclaimer. The auto chartist service includes chart pattern identification in respect to foreign currencies, commodities, equities, and stocks. There are potential risks relating to investing and trading. You must be aware of such risks and familiarize yourself in regard to such risks and to seek independent advice relating thereto. You should not trade with money that you cannot afford to lose. The auto chartist service and its content should not be construed as a solicitation to invest and or trade. You should seek independent advice in this regard. Past performance is not indicative of future performance. No representation is being made that any results discussed within the service and its related media content will be achieved. All opinions, news, research, analysis, prices, or other information is provided as general market commentary and not as investment advice. Auto Chartist MDIO software, their members, shareholders, employees, agents, representatives, and resellers do not warrant the completeness, accuracy, or timeliness of the information supplied, and they shall not be liable for any loss or damages, consequential or otherwise, which may arise from the use or reliance of the auto chartist service and its content. Okay, thanks for listening to that. We're going to move on to our table of contents, and today we're going to we'll start out with discussing who was Fibonacci. And again, I want to tell you that this is a discussion of the Fibonacci patterns that auto chartist automatically finds for you. It's not a full-blown discussion of Elliott wave theory, but it does show us the main components of the Elliott wave theory in a pretty logical fashion. Start out with the simplest pattern, the ABCD pattern, and I move to the more complex Gartley pattern. Included in there is the butterfly pattern, which is Yvette's favorite pattern, as she mentioned. I keep getting a box that pops up here, and I'm going to make that go away. Okay, so to start out, I'll put up a picture of a market here while I talk. The Fibonacci patterns are named after a man named Leonardo Fibonacci, and he was a famous mathematician in the 13th century. Came from a very wealthy family, didn't have much to do. There weren't markets at the time, and so he played around with numbers a lot, and he discovered a sequence that became quite popular. And back then, different mathematicians and throughout history, mathematicians such as Newton and Kepler and Da Vinci and people like that, they would name things after themselves when they discovered things. So Fibonacci called his number sequence the Fibonacci sequence, and what it includes are a series of numbers that start out with a count of 0, 1, 1, 2, 3, 5, and so on up to infinity. And you can see what the progression is in these numbers is that each number is added to the previous number. So you can see that, for example, 55 and 34 is 89. And so when he developed this sequence, he also noticed that there was a ratio between these numbers. So if you divided, for example, 55 by 89 or 89 by 144, you'd come up with these important ratios, which most important is the 618 ratio. Okay, and we also have minor ratios of 382 and 236. Now what happens with these Fibonacci ratios is that scientists and traders alike have found out or discovered that market patterns tend to adhere to these relationships in the market or these ratios in the market. And oftentimes they're used to determine critical points that can cause an asset to turn and change direction. In other words, we call them potential support and resistance points. Okay, so once a trader has a pattern determined, or once auto chartists determine a pattern, it makes projections as to where the market could go, because the beauty of working with the Fibonacci sequence or any kind of Fibonacci patterns is that you're tying together two key elements of price and time. So there's a very important price and time symmetry relationship. So what it's basically saying is that the market movement isn't really random, that there is order to it, and that if you have the right components leading up to current conditions, that you can make a reasonable prediction as to where this market can go or where it can stop and turn. So it's very important, you know, as a trader to have a forecast. Some traders prefer to just trade with the action and not look at forecasts, but others prefer to have a peek ahead of time to kind of get an idea of where the market could go, where they need to put stops, or maybe even take profits if they have a good position on. So this is why AutoChartist has developed this section of its platform so that you have the ability to do those things, place stops, enter the market, as well as exit the market with price targets. Now, as I mentioned, you're going to have key areas on the charts, and included in these areas are the 618, which is very important, a retracement zone, and its partner is a 50% retracement. I tend to work with those two retracements, a 50% and the 618. You can also have a 23.6% retracement or a 382 retracement. If you subdivide the market too much, then what's going to happen is you'll have prices too close, and sometimes you end up with a condition called analysis paralysis, where you have so many numbers that you can't pull the trigger on a trade. So AutoChartist and myself and other technicians prefer to try to keep the charts clean, show the major moves, and show the major objectives in the marketplace. Okay? Now the first pattern we want to look at, and we've been staring at here for a few minutes, is this ABCD Fibonacci pattern. This is the major pattern, or the pattern that really sets all the other Fibonacci patterns that we're going to talk about in motion. And what you can see on this chart is it's highlighted by A, B, C, D movement, and it basically looks like a lightning bolt. So throughout this webinar, we'll talk about the lightning bolt pattern as being a part of other patterns. So you can clearly see that some people want to call it a zigzag, some people want to call it a lightning bolt. But what happens here is each identified point, each point has been identified by a letter, and those letters represent significant highs or significant lows. Okay, and these points define 3 consecutive price swings or trends. All right, so they're identified as legs also. So movement from A to B is considered to be leg AB. This is leg BC, and this is leg CD. Now, what AutoChartist has done is it shows you that after point D has been reached, and again, this is a precise mathematical relationship to these previous movements, it gives a forecast of where the market could move to. It shows a retracement of this previous move down. So after D is formed, AutoChartist will put in automatically these different levels here, which represent 382, 50%, 618, and so on, where the market can move. Corresponding to these levels are the actual numbers where the market can move to. And so this is very critical. So if a person is, for example, trading a trend, and he sees that the trend is market's making lower tops and lower bottoms, he's looking for a reversal back up. So if he's short the market, he may decide at this point, after point D is identified, to ride out the trade into one of these retracement zones and then hope for a continuation of the move down. A counter trend trader may look at this and say, I have a good opportunity to go long here against the trend, and I can have a short-term objective identified. So, and the other thing is, if a short trader may want to use point C as an exit, say he's riding this move down, but he also may want to place a stop over one of these retracement points and then exit the trade if the market went through the stop. So you can see that there's a lot of importance instilled in this ABCD pattern, but most importantly, it's best to know that this pattern, or all Fibonacci patterns, are based on or include this pattern. Okay, so that's what's really important about this ABCD pattern. All right. And it's also important to note that when you use this ABCD pattern, it can be used in conjunction with other Fibonacci chart patterns, which I'll show later when I go to live data. Okay, so now if we switch to our live chart, see that I have pre-selected Fibonacci patterns. I have the choice to pick chart patterns, which are basically the breakout patterns, the traditional breakout patterns that we've seen in previous webinars. And in this case, I've gone to Fibonacci patterns. Okay, I have the choice to pick an emerging pattern, or I have the choice to pick a completed pattern. An emerging pattern is going to be a pattern that is set up for a particular Fibonacci pattern, and a completed pattern is one that is taking place and ready to make its retracement. So sliding down my selector here, you can see that I've predetermined, or I've made several searches, and I've set up one search for the FX major ABCD pattern, and I've also set the same pattern up for the stock indices. So we'll take a look at the Forex markets this morning using this ABCD pattern, and first of all I'll show you how I did it. Using this edit button, you can see that I've selected FX majors intraday based on my drop down menu. Okay, now down on this advanced search area, I have selected, going all the way down to the bottom, and I've deselected all these other patterns that are here, and I've selected the ABCD pattern. I've saved the search, and I've come up with my permanent search here for the ABCD pattern. By clicking this on all these ABCD patterns that are taking place this morning or this afternoon, you can see I've set the time for Johannesburg. You can see that these patterns are currently taking place. So what we have here is a pattern that developed or was completed on the 4th of October, and it was for the Euro US dollar. And that's when the market made a bottom at D, point D, and rallied a couple of bars, thus confirming this bottom. After this point D was made, AutoChartist gave a forecast that this market could retrace back into a series of Fibonacci levels. And you can see that's what the market's doing. Okay, it has exceeded, or basically is approaching this 0.786 retracement area, because the market has been bullish the past 2 days. So again, in this particular case, the analysis worked very well because the market didn't continue on down past point D, but actually did make a hook and started heading towards our retracement areas. And as I said before, how are you going to use this valuable information? If you're short the market, all right, on this break, because the euro has been very weak, both fundamentally and technically, you have the choice to decide how much heat you want to take or how much profit you want to give back. You can select point C or point A as exits, but you also have to realize that you can use any one of these exit prices or these Fibonacci targets as exit prices also. Okay. Now, if you're a counter trend trader and you thought perhaps that the market was getting too cheap, or the euro is getting too cheap, and you agreed that a bottom was being made, you could have flipped to the long side of the market and used any one of these price levels as a target zone. Okay, so it's important to note that there's that this is set up for two types of traders: the trend trader and the counter trend trader. All right, so that's important to know, and that's what's going on right now in the FX market. Now in the stock index market, we've also seen a lot of activity this week because this market has been, the global equity markets, or CFD markets, have been beaten down pretty hard. So it is possible that we have some fresh data, and you can see that the U.S. technology market, or this U.S. technology CFD market, did basically the same move that the euro did. Okay, now that was pretty profound of me to say that, considering they were both ABCD patterns, so they should look the same. And that's one of the benefits of working with the ABCD pattern, any of these Fibonacci patterns, is they usually all look the same. the vehicle changes